Hi, it's Jay Green with GW Private Capital in Whittier, and I wanted to explain to you what a trust deed investment is. I've been arranging private money loans and offering trust deed investments to local private investors for more than 30 years. A trust deed investment is simply the investment in a private money loan that's secured by real estate. So when you invest in a trust deed, you're actually becoming the lender or beneficiary that's named in the promissory note. And a trust deed investment is comprised of two primary pieces of information, which is the promissory note and the deed of trust. And those two go hand in hand and make up a private mortgage. When you're investing in a deed of trust, you're becoming the lender, the beneficiary named on the promissory note. The borrower is agreeing to the terms in the promissory note to pay you, the lender investor, in accordance with the terms of that promissory note. The payment, the interest rate, when's the payment due? Are there late charges? When is the loan due? Is it due in 6 months? Is it due in a year? Is it due in 30 years? Those terms are stated in the promissory note. The GW Private Capital Trust Deed investment process goes as follows. We work with realtors, loan brokers, property owners, borrowers, or buyers that are buying property. People come to us and need a loan to buy a property, to refinance an existing property, to pull a little cash out, to go buy that building, to buy that fixer, to do that construction project. And perhaps they've gone to a bank and maybe just turned them down, or the borrower, property owner decides, you know what, I don't want to jump through all those hoops. I just want to get my money. I don't mind paying a little higher interest rate. I'm going to go to a private money lender like GW Private Capital. We'll find out the story. What are the funds being used for? So we'll get some basic information about the property, the borrower. We have a loan application package that we have the borrower fill out. We look at their credit, establish a value of the property, and then when we have a summary of the loan request, then we contact you, the trust deed investor, and we present that opportunity. If you're interested, then we'll provide the full borrower package. Whatever documentation goes with that particular file, we'll furnish to you. Establish the terms, the interest rate, the loan amount, the term of the loan, the cost of the loan will be presented to the property owner or buyer. And then they'll sign it saying, hey, I agree to these terms, or maybe we need to negotiate some of the terms further. And then they'll send it back. And then the borrower says, I like those terms, let's proceed. And then we continue to underwrite the file, or we start that more in-depth underwriting process of opening escrow, opening title, maybe get an appraisal ordered, getting additional documentation that we need. So now once we have all the documentation we need, our disclosures are signed, and we have an escrow open, now we're going to draw our loan documents. And those are the borrower loan documents that include the promissory note, the deed of trust, riders, all these documents that go into our borrower loan documents. We prepare them and we send them to you for your review. Final loan documents, and then they go to escrow and the borrower signs all the documents, and then when we're ready to fund the loan, title will instruct you on where to wire to fund that loan. And so your money's secured. We at GW Private Capital, we don't touch your money. It goes directly to title, and then the escrow is going to do a final settlement of the file, and then you're going to receive all the original loan documents signed by the borrower, a final HUD or settlement statement from escrow, and then we're going to get that loan set up for servicing, whether you're servicing it yourself or we're using a third-party loan servicer. To invest in trust deeds, you have to meet requirements by the California Department of Real Estate as far as suitability requirements. In California, you need to have a certain minimum net worth or a minimum annual gross household income. So our trust deed investment process is very formal. We don't handle your money. We don't put it in a mortgage pool. We're presenting you these great California trust deed investment opportunities. They're basically just you providing funds to create this private money loan. Every trust deed investment is secured by a specific property that you get to go look at, inspect, evaluate, You look at every borrower's credit, their income, how are they going to repay this loan? Our trust deed investments are secured by specific properties that have specific amounts of equity. When you're investing in trust deeds, what actually makes them very secure and safe, mostly the amount of equity in the property. You're investing in a $250,000 first private money loan trust deed investment recorded against a $500,000 property. You're at a 50% loan to value. The loan to value is the relationship between the loan or loans into the value of the property. And so in this case, $250,000 loan divided by a $500,000 valued property, a 50% loan to value with 50% equity remaining in the property. The more equity is in there, the safer the trust deed investment. Now, you need to look at other factors. The condition of the property, where it's located. Is it a piece of land with no structures on it versus a home in a desirable area? All those factors we take into consideration. Where it's located, the credit of the borrower, is it a rental property? What are the leases in there? Is it an apartment building? Is it a commercial property? The investment process with us is us doing all the homework, relaying that information to you about the borrower, the property, what they owe on the property, if they owe anything, do they owe any taxes, making sure that the insurance is in place, if they're tenants, are they making their payments, if you're going to be investing in a construction project, that we have a scope, a budget laid out, and if we're doing funds control, we're holding money back, and who's going to do the inspections. If we're lending a second mortgage, you're investing in a second mortgage, okay, what are the terms on the first mortgage? What's the interest rate? When does the loan mature? Is it current? How much is the payment? Because when you're investing in a second deed of trust and the borrower, if they are to default on the first, we need to talk about, should you bring those payments current? My more than 30 years of experience of arranging thousands of private hard money loans, what possible scenarios can arise from borrowers filing bankruptcy to going in foreclosures, which most of our borrowers are great. They make their payments, they contact us, they communicate. When you invest with us at GW, it's a relationship for life. We don't just put you into a trust deed investment and then you're on your own. We're there for the life of the loan. When we care about your investment, we invest a lot of our own money in these trust deeds. We want you to have a great experience. We want to put you into trust deeds where you're going to preserve your capital, you're going to get a good return on your investment, and you're going to want to repeat that process with us. The annual returns you can receive on first trust deeds, they can be in the 6% range up to 12%. On second or junior mortgages, the rates are 10 to 15%. What drives those different returns is basically the credit, the property, the circumstances, the loan amount, the loan to value,